Hey everyone, welcome back to Yuri's Box. In this video, I'll give a quick update to TLT and take a look back at the week that just finished. So if you like this kind of content, consider leaving a like. And nothing in this video, as always, is not financial advice. So the past week we've had really the highlights of the week were initial claims, PCE, and also an extra kind of bonus from the Atlanta Fed's GDPnow forecast coming in week, and we'll take a look at that. So if you're not familiar, in the first video actually I made, it was actually on February 13th, and that was exactly here on the 12th, February 12th, and it was when we had CPI come out. And in that video, it was actually my first video, I said that it pays to be optimistic, especially when, in a moment where everything kind of seemed was doom and gloom for bonds. Again, it paid to be optimistic because there are a lot of factors, in my opinion, that were likely to kind of push the needle from inflation fears to growth fears. And I pointed to a lot of things. I pointed towards the quits rate being at cycle lows, being well below the pre-pandemic levels, and the implication of the quits rate being low is that employees are losing leverage in the labor market, and that generally means that compensation doesn't have so much of a tailwind, to drift higher. And if compensation is going lower, that'll just weigh on consumption, and it'll just be a drag on economic activity. I looked at how it is, again, just as an extra, it's already here, as an extra, added point, there's a nice correlation between the quits rate and inflation. And again, it's just because the quits rate kind of tend to lead compensation, and if people don't have the tools to keep up with prices, any increase in prices is more likely to have a negative effect on economic activity rather than just escalating into a spiral. And you can see that in eventually people will start spending less, and eventually you'll see that in companies eventually losing pricing power, meaning that they can't pass on their price increases onto the consumer, and eventually that'll start to hurt their margins. I also pointed out how initial claims tend to bottom out, okay, in this in the January timeframe, okay. And my general expectation for initial claims is to see them slowly drift higher. I think this is a good place to start. So on Thursday we had initial claims come out, and they came out hotter, let's put it like that, than expected. The forecast was for 221, and it came out at 242. Now, I didn't actually have the chance to look into it myself, but I was actually listening to Bloomberg's Michael McKee when he was announcing the numbers, and he pointed out two things. Again, I still haven't looked into them myself, but one, this number doesn't include any federal employees. Number two, there was a mechanical kind of, the numbers were mechanically pushed up due to the seasonal adjustment that occurs in this week. So there was actually fewer claims, and that kind of pushed the number higher. In any case, we did get a worse number than expected. So 242. Again, I'm not so excited about this because, we've seen this kind of move many times before. And actually, when it has a big spike up, you usually tend to see it kind of retrace. So I wouldn't be surprised if next week's number is somewhere between 220 and 230. Okay. Um, but again, short fluctuations aside, my expectations, as I pointed out, and many times in my previous videos, is that initial claims bottom around this time of the year, and they tend to trend upwards towards the summer. Okay, just like we saw last year. That is my base case. Just a slow grind higher. If we do see, initial claims actually break out, say to 300,000, that would change. That would change a lot of forecasts for that. That's for sure. But again, I think the best way of looking at it is just expecting. At least that's the way I'm looking at things. I'm just expecting initial claims to slowly grind higher towards the year, throughout the year. We had PCE come out, which again I pointed out last week, looking back on TLT, how we had this breakout, and I wasn't really worried about this trend line. Again, trend lines are meant to be broken. The only issue I had, and it's still kind of really the issue I have with this breakout, is that we usually tend to see a retest of it. Okay, and I honestly thought that a mild upwards surprise on PCE could have been the catalyst for a potential retest of this trend line. Of course, it doesn't have to happen, but in the context of history, that's it's something that isn't out of the ordinary, and I would keep my eyes out for anything that could kind of spook the bond market. Apart from say economic data coming out particularly hot, or let's say non-farm payrolls coming out hot next week, and I'll talk about that in a separate video. I don't see many headwinds for bonds, keeping in mind that we've just come out of this downtrend that started in September and ended in January right here, which was already like a hefty move downwards, like 16%. Just looking from let's call it a technical point of perspective, a bounce was to be expected. Let's just see if we have follow through, and we can push up above, say, the $95. Okay, already the fact that we've gone over the 89.50 price level is promising. It just kind of breaks out of the pattern, like this sort of wave, okay, a pattern that we were kind of hinting at, especially when we first failed the breakout here. But coming back to PCE came in line, and so it really just gave the green light to TLT. And the weekly close for TLT was actually, this is one of the most beautiful things that you can see on a chart. Just a big fat candle like that. There's nothing better. Again, I would keep my eyes out for anything that just kind of even a momentary spook. Say anything that results in like we would call it a doji candle. Okay, like something temporary. I wouldn't be surprised to see that. Okay, just a huge flush. That wouldn't surprise me. It doesn't have to happen again. It's just something to keep in mind. And then honestly, yesterday, that leads me to the next, to the third thing, is that yesterday when I was recording my video on Bitcoin, I was scrolling as I recorded, and I saw that the 2-year yield was rallying quite hard, and it actually closed below 4% for the first time since October, really. And that came out on the back of this, the GDPnow from the GDPnow forecast from the Atlanta Fed. Um, you have to keep one thing in mind, that the way GDP is calculated, you have consumption, you have government spending, investments, and net exports. I don't think I'm missing anything else. Um, so if you have imports being higher than the exports, that will actually act as a drag on the way GDP is calculated. And that is actually what we saw. I think it got released yesterday with the PCE data. We saw imports basically explode higher because of, again, potential tariff fears, um, and that likely contributed a lot to this initial estimate. Okay, we get another estimate on March 3rd. I wouldn't be surprised if this just ticks up, say, to zero, something like that. It seems very drastic to me, and again, I wouldn't get too excited about about this print, because again, first of all, it's an initial forecast, and initial forecasts can very well be revised higher. And again, you do have that factor weighing on the number being negative. Now, again, you're talking about nearly a 4% move. Can it all be tied back to the imports being higher than the exports? That's something we'll have to keep an eye on, of course. And I think that the next release on March 3rd could potentially give you a further insight towards that. So really, that's really what our week had. We had initial claims come in higher. Continuing claims, if I'm not mistaken, were kind of flat. We didn't really have much. Anything happened there? Yeah, nothing new. Um, Generally speaking, though, you want to look at initial claims as a barometer. It kind of goes hand in hand, I think, with the quits rate. Continuing claims being stable at somewhat elevated levels. Okay, we are back at definitely pre-pandemic levels. That's for one thing, and it's just a symptom of the fact that people are having a harder time finding a job. Okay, the fact that people aren't quitting their jobs tells you that, and the continuing claims tell you that people are staying on unemployment. Okay, and so they're not getting back into the they're not finding a job easily. So keep everything in mind. So initial claims, continuing claims, PCE, and the Atlanta Fed GDPnow forecast. I'll leave it at that, and I'll see you in the next video. Bye.